Welcome back to the Contrarian, everyone. I hope you're all doing well. I certainly am. I know it's been a little while since I've made a video. I've taken the last couple weeks off, around Thanksgiving and since then, and actually not a whole lot has really happened in the markets. I mean, yeah, we still continue to see more clarity about the upcoming Trump administration 2.0, the people he's going to appoint and everything like that. So news like that has happened, but nothing major. And I would say kind of the main things that I'll talk about today are where the US economy is likely heading, and more so investors' expectations of that kind of seem to be shifting. I would say that's probably the most noteworthy thing of the last couple weeks. Also, China just announced more stimulus for their economy, and so Chinese stocks do appear to be rallying again on this news. And we also have the CPI report coming out again tomorrow. That'll be important, I think, just for the day, depending on where the market indices end up going for the day. And I think it'll really probably play into the narrative just in terms of if investors are afraid of a new upcoming wave of inflation again or not, depending on CPI, or maybe it'll affect that. But, first diving into what I would maybe see as the most significant aspect of the last couple weeks is to see many investors who were formerly, I would say, pessimistic or bearish on the market suddenly flipping to being bullish. And in some cases, I wouldn't say it's a dramatic shift overnight, like where they just come back and they're completely changed. But I would say in the last couple weeks, we've seen a lot of, whether it's research firms or investors specifically, or different financial institutions, as an institution coming out and raising their expectations for 2025, whether that be raising their targets for the S&P 500 or the NASDAQ, or whether that be their, I would say, just overall enthusiasm on the US economy. That is by far the biggest change that I have seen in the last 2 weeks. We saw Trump win. We saw, I would say just kind of an immediate reaction after the results of the election, after a lot of investor fears were, subsided just as a result of the decisive victory that Trump had and that the Republicans had. I think the market was kind of scared going into the election, scared that it would be very close, scared that it would be contested, scared that there'd be more unrest, kind of a situation like that, like what happened back in 2020. And, with that not happening, there was a lot of immediate, assets that rallied on that, especially those that were directly linked with Trump winning. Of course, crypto has really taken off since then, and, different stocks that are kind of tied up with Trump. But overall, I would say it's kind of only in the last 2 weeks when investors have kind of, I would say, seen the forest for the trees and seen kind of the upcoming changes that the Trump administration is going to bring in the coming year. And, by far, I would say that the focus on government efficiency and cutting regulations and, kind of that side of the upcoming change that is going to take place, I would say that is probably where the majority of investors see this reason for optimism. I would say that's why they're optimistic, is they believe that Trump, with the ability of cutting regulations, increasing U.S. energy production, and so forth, and hopefully cutting government spending, I would say that most investors see that as bullish because they see that as kind of maybe more almost of a stimulative effect behind the U.S. economy, not to mention any new tax cuts that Trump could bring in as well. So I would say that that's likely where investors are coming from in their optimism. I would say personally it seems probably a bit optimistic in my point of view to see that as all happening, immediately once his administration takes effect. Just kind of seeing how bureaucratic these systems are. I know it is going to take a while for them to really take an effect on the economy in terms of cutting spending, in terms of cutting regulation. I do think it'll take a lot longer than most people are giving him credit for, but in terms of investors kind of shifting their overall outlook, I do think that is a correct, at least in the short term, a correct stance to take. Me personally, I would have to agree with that level of optimism. Although I would also say I do see a lot of kind of upcoming headwinds for the U.S. economy that I don't know how effective Trump can really be at heading those off. So, I might not be as completely optimistic as some other people out there currently are. That really remains to be seen how quickly a lot of these policies can take effect and things like that. We've also gotten to see with greater clarity just who the individuals are who Trump is appointing, and I think a lot of the fears that the stock market had have also subsided in this area. I think, after Trump won, there was a lot of, I would say, just overall questioning in terms of who he was going to appoint for these positions. Were they going to be complete outsiders? Were they going to be these complete kind of burn and slash kind of, very disruptive kinds of appointees? And I would say for the most part, the market's fears have been quelled as well in this area. Just, seeing a lot of the experience that these individuals bring, and they're kind of already in their respective positions or close to them already. So I would say, like with Jerome Powell staying put, Trump effectively saying that, yeah, Jerome Powell isn't going to go anywhere unless he wants to, or, with the secretary that's going to replace Janet Yellen. I would say that, in a lot of these instances, maybe the market was fearing for the worst in terms of, oh no, are we going to get some lunatic or, crazy fringe person in there? And it does appear like, status quo and kind of maybe the best of both worlds is going to take place there. So, overall, I would see this kind of shift in sentiment, the shifting of expectations in the last couple weeks as kind of being the most important change that has taken place. Of course, actually the market indices have continued to go higher. The S&P 500 is close to 6,100 now. The NASDAQ, it's also ticked up over the last couple weeks as well. The Dow, of course, a little bit too. The Russell actually is kind of overtaking the indices, at least post the election. The Russell has outperformed all the other indices, and it's my personal expectation, just given how much catching up the Russell 2000 has to do, that going into 2025, that's definitely the most bullish I am on a sector of the stock market, would be the small cap areas, just with how beaten down and underperforming they have been. I mean, it really was only recently that they started kind of retesting these prior all-time highs from 2021. Whereas the S&P 500, the NASDAQ, the Dow are all significantly higher than, where they peaked at back in 2021. So the Russell just has a lot of catching up to do. That's definitely where I think that, if we kind of see the things I'm expecting, pretty soon after Trump starting, and even before then, I would kind of expect energy prices to continue to come down, just as oil output is anticipated to rise. I mean, the energy industry really does look out several months into the future. So I would say even before Trump is in there actually doing things, probably the price of oil, natural gas, energy as a whole can actually continue to go down without him really doing anything. Of course, when he is actually in there, I think a lot of that can accelerate to the downside as well. He's made that a priority of really freeing up American energy production. And so, oil companies don't have a lot of discretion when it comes to drilling, and if they're allowed to do that, they will pretty much do as much as they can, within a reason, of course. But, with oil prices still being, I would say, close to $70 a barrel, it would suggest that, in the coming months, cost of energy could continue to go down. And with that, you could definitely see inflation, CPI, and everything continue to tick down as well. And with that, I think you would really begin to see interest rates finally come down. Of course, they've stayed, I would say, elevated above what most investors would expect. And, what with, for example, the 10-year kind of correcting back to around 3.7%, and then, rallying pretty I would say, dramatically back up to the mid 4.5% range, a lot of investors, I think, were beginning to question where rates were really going to go from here. And it's my expectation that actually rates can come down pretty quickly. Um, and with that comes a lot of, I would say, just alleviation of kinds of the problems that occur when rates are elevated. Of course, it makes paying for a house, paying for car payments, everything like that. It just makes it more restrictive, and so I do think you could actually see some economic activity that does get stimulated just because of rates eventually coming down. I would say I would kind of expect the 10-year to probably get down into the 3%, if not slightly under 3% within a year, in 2025. Don't quote me on anything like that, but that's kind of what I would reasonably expect to happen, with rates and everything. And of course, the Fed can continue to cut on the short end of the curve, but it really is, the longer end of the curve that really matters. Of course, that's where your mortgage rates and everything else like that are really coming from. So, the Fed can control the Fed funds rate, and that's, nice if they can cut that too. But what really actually can free up the economy is if the longer end of the yield curve can come down. So, that's my expectation with CPI, with inflation, and with rates. I personally think that inflation and the concerns of that are in the rearview mirror, and that actually the real hazard at this point is that the Fed stays too tight for too long. If anything, it could be the case where it's kind of revealed later on that they did stay too tight too long. If for example we go into a recession, and when you go into a recession, it's kind of an issue of, oh, we did stay too tight for too long, and now we can see that we should have began loosening a policy a year ago to potentially avoid this. So I don't think the Fed can really prevent something like that from happening at this point, but if inflation comes down, if they're able to loosen monetary policy some, I would say that would probably be a encouraging development. The market would definitely see that as bullish. And so if CPI tomorrow, today is Tuesday, December 10th, so if tomorrow CPI comes in, I would say like at or under expectations, I would see the market probably reacting positively to that. Whereas if it's coming in higher than expectations, that's probably a signal to the market that, yes, investors are correct to be afraid of inflation coming back. But it's my expectations, at least in the coming months, that inflation can continue to come down. So those are my expectations. We'll really see where that lines up with the results tomorrow. Also something I was going to talk about briefly is China, and Chinese stocks have really underperformed most other stock markets around the world. Of course, the US, Japanese stock markets have really performed well in the last year or two, and China has really underperformed. We saw China really kind of, I would say, begin to rally in the late summer months of this year. So, August, Chinese stocks were kind of beginning to take off back then, and then suddenly, they did underperform again as well. Many of them kind of actually retesting the lows that they experienced in the summer. So, what with China recently announcing more stimulus and everything like that, I do see that as, bullish for Chinese equities. Me personally, my positions in NIO and Alibaba aren't huge, but they are, two positions of mine that I see as, potentially doing well, or yeah, I do see them as doing well if China's economy as a whole can improve. And of course, with stimulus, it's kind of an issue of, at this point, can China really stimulate enough? Are they actually in too much debt at this point? Can they even, continue to kick the can down the road? And, it's my personal expectation, just with, the momentum that China has behind it. It's not really anywhere close to truly facing kind of a stagflationary environment where they aren't able to continue to grow, continue to kick the can down the road. I think eventually they do get to that point where, just kind of the whole, explosion in growth that they had occur in the last 20 years. I do think that eventually does come to a point where they've basically maxed that out. It's kind of my personal expectation that that hasn't happened yet. But that as well does remain to be seen. The Chinese stock market did rally pretty aggressively on this news that the Chinese government will stimulate more, but I think it's kind of waiting for confirmation on that. So, overall, I continue to have positions in a couple of Chinese equities, but I'm not really changing anything there. So, really going to wait and see how that results. But yeah, I'd love to know what all of you think about this in the comment section below. The upcoming CPI report, I would say just the overall optimism shift that we're seeing in the U.S. stock market, U.S. economy, and then China. What can we expect from China going forward? Love to hear what all of you think. Hope to see all of you again at some point.